my window.
Hello, traders. Gary Wagner with the Gold Forecast here, the very first day of May 1st. It is approximately 1 p.m. in Honolulu, Hawaii on Sunday, which means it is Monday in Australia and the beginning of the trading week. This is the first edition of the Gold Forecast for May 2011. Gold is trading under pressure after opening up and gapping quite high, and I'm going to show you that on an intraday chart in a second. We had this market come back, currently trading at 1551.40, and it is backfilling the gap that it created on today's open. We are looking at a 15-minute candlestick chart. You can see that this market is entering a round of profit taking. This is that current trading activity. When we take a look at the market's open itself, that's right here, what you'll see is that when the market opened, it gapped higher and actually formed a high right up here just below 1580, about 1577. The actual marked high for the day was 1577. And as you can see, what's happening is the market is coming down and filling in the area of the gap. It is now going to about the 1545, which is where I show a gap on my Forex chart. So it does seem as though the market has found some tentative support right around 1542. That's this area here. This is this low. We are looking at a 3-minute, very, very short term, again, 3-minute candlestick chart. And you can see that it, after forming that low, it has started moving up. You get this incomplete piercing line in terms of candlestick pattern and the follow through. We have had now for the last, call it 7 or 8 minutes, the market is trading back up. This market, over the next couple of weeks and months ahead, traders expect volatility, expect an increased trading range, really expect the unexpected, because we are absolutely in uncharted territory, and as such, this market's going to roll around. Now, we had silver run back down to about $43, and it has really, really sold off hard on the open here. Traders typically on a Sunday here in Honolulu, Hawaii, when this market's trading, it's usually a very, very light trading activity that we get. And I look to see any kind of indication of where it might go as it goes into Hong Kong, into London, and then into New York. Not such today. Silver, when we take a look at that chart, in a period of a couple of minutes went from $48 to $43. We had gold following suit. However, take a look at this. We are now looking at our 5-minute candlestick chart. I've moved from the 3 to the 5, and you can see that once it hit that 1545, we've got this double bottom here. This is called a tweezer's bottom. A tweezer's bottom is a Japanese candlestick signal which just has equal lows or matching lows. And you can see we're back up around 1553. Now, when we consider that where the market opened up itself, because this, of course, is the beginning of that trading activity, the open was incredible. I've not witnessed an open like that. I can't say I've ever experienced it before. But when the market opened, and this is on a 5-minute bar, in the first 5 minutes, it went from 62 all the way up to 72. You had a $10 move in 5 minutes. A little bit of consolidation, and then it went and it made another high. And this time it made a high of 77. Once it hit that high, in terms of candlestick signals, now these are very, very short term, of course, but you have this shooting star that comes in here, and then a series of these long black candles bringing the market back down below the initial open. Now, the initial open is right in here, brings it down there, it forms a little bit of a base, and then again falls until it found that support around 1545. Now, as you can see, the market is recouping at this point. Silver is beginning to recoup also. That's trading off of its lows, attempting to form a base. But you have to realize that silver has moved up parabolically. And when it moves up parabolically, it has that opportunity to move down parabolically. In other words, if it goes up hard, it's going to go down hard. I had an interview in which I did for Kitco News, and it's precisely what I mentioned during that interview. Traders, I will tell you this. We are in for a most interesting week. And again, I really want to expect the unexpected. We're going to end on this particular chart. And this, of course, is the primary chart that we typically use. And the one thing that I am observing right now, and I do find interesting, is that when we look at this upper channel line right here, when we got that low, you notice that the actual low that it had in terms of where it opened and closed, it closed above that line. Now, it did make a low below it, but you can see that it actually opened above that and is continuing to trade higher. Now, if we bring that into perspective, meaning we take a look to see where that line comes from, you're going to see that that actual line comes from one of our original tops, which is right here. And you can see this channel line, which is that top of the market, now becoming support. Remember, one man's floor is another man's ceiling. This has been Gary Wagner wishing you, as always, good trading, and we will talk to you tomorrow for another daily report. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange.